Welcome back, everybody. You guys are tuned into the official YouTube channel for the CoinCasso Cryptocurrency Exchange, the official crypto partner of Paris Saint-Germain, one of the world's greatest football clubs. In today's episode, we're going to talk about Chainlink. Nothing else, just Chainlink. Now, Chainlink makes up a large portion of my portfolio, and I've been watching it tank over the last several weeks, holding on to my bag because I know that it will rebound. And in this episode, we talk about the movement it had yesterday and why it's so important. Good morning, everybody. It is Friday, September 25th. Thank you so much for joining me every single day. I appreciate every single one of you guys that comes back here every day and watches these videos. All the likes, all the comments, and all the support, and defending me against the trolls in the comment section. Yes, that's you, David. And if you're new here and you like what you see in this video, consider subscribing down below and tick the notification bell to get notified every time we upload a new one. So, cryptocurrencies across the board have seen their first big spike since the downfall on September 1st. Bitcoin 3%, Ethereum 6.5%, and Chainlink up 20% in one day. So let's not waste anybody's time. Let's make a short technical analysis video on Chainlink and where I think the price might go over the next week. All right, so I got my chart up and now we are looking at the daily chart of Chainlink since July. On July 5th, we started this huge ramp up, got up to $8.66, had a little bit of a pullback, and then rallied all the way up to $20. Since that time, a $20 barrier on a coin that's reached its all-time high, a pullback is expected. It pulled all the way back to $13, but then continued its rally up, reaching almost $18 at the end of August. And just like everything across the board, financial markets, global economies, and cryptocurrencies took a huge dive on September 1st. The initial drop got us down to $9.20, bounced up a little bit, giving people some hope, but the market makers weren't done with you yet. They brought it down even more to its recent lowest price at $7.50 from a high of 20. Now, I don't know about you and your arithmetic, but that's 63% for me, and that's painful. What have I told you guys about pain and suffering? At that point, where it's no longer bearable, that's the time that the price reverses. So why do I think we're not going to continue this downtrend? Chainlink is too big and Chainlink is too important. At one point, it was the 5th ranked cryptocurrency out of all of them, currently dropping down to the number 8 spot. And when you look at the fundamentals of the company, the price of Chainlink does not reflect that. It is extremely undervalued right now. So we're going to look at 3 things. We're going to look at support and resistance levels. We're also going to look at moving averages and the almighty Fibonacci retracement. I'm going to try to explain this to you in the most basic way possible so that you guys can easily understand what's going on with the price action. Okay, support and resistance levels. It's very, very easy. When a price hits a certain level and bounces off of that, that's a support level. When a price is going up and bounces off of a certain level, that's a resistance. Boom, there you got it. This is that easy. You saw price support here, you saw price resistance here, you see support here, you see resistance here, and resistance here. But is this level of support good enough to actually justify a solid bounce and an actual reversal of the price going up? That's why you have to use other indicators such as Fibonacci and moving averages. So let's get rid of these lines and look at the Fibonacci levels. You take your wonderful Fibonacci tool from the first bullish candle all the way up to this top of the bull run. Now, why am I going upwards? Because we are on an uptrend. Chainlink price was way down here and now it's way up here. Uptrend. I know everything is crashing, so everyone thinks it's a downtrend, but the overall, large picture is up. So as price momentum goes up, it builds a lot of pressure, causing the pressure to build up so much that it has to go the opposite direction. And the Fibonacci levels tell you where it may stop. The gold zone is the 50 level and the 618. That's a perfect retracement. It hits a 50 reversal and then goes up the other way. This is basically its rest period while it maintains its upward momentum. On September 5th, we hit the 618 level and started to bounce back up. This brought me a lot of hope and showed me that yes, it's gonna go up the other way. But the market makers wanted to collect more contracts on the way down so that they can get a cheaper price as they build up for their long position. So basically it was a fake out and it continued to drop all the way down to $7.50. This is the 786 level. This is the level where alarms and sirens are going wild and everybody is thinking that this is going to tank down to zero. The pain and suffering point. Yesterday we hit this 786 level and bounced right off of it. This is a good indicator for me. But how do I know it's going to maintain its upwards trajectory? That's when we look at moving averages. Okay, to get this more precise, I've taken it down to the hourly candlestick chart. I'm gonna zoom in just a second, but basically to show you, this is the top here on August 30th at $17.83. Now I wanna use two moving averages for now, the 20 and the 50. A moving average is basically the average price that it's moved in a given time frame. So 20-day and 50-day moving averages. You can see we dipped under the moving averages and maintained this downwards trajectory. We even broke through here on the 61.8 retracement, but again dropped below the moving averages and kept coming down. Now I've zoomed into all of yesterday. You can see here the price dipped down to its lowest point of $7.50 and immediately started climbing back up. It has now broken above the 20 and 50-day moving averages and had a lot of selling pressure here at the $10.50 level, bringing it back down a little bit. But what did I tell you about Fibonacci retracements? These things live everywhere on a large time frame as well as a smaller time frame. So zooming it in even closer, you can see a Fibonacci retracement right here. The price went up and then down to the 618, continuing its momentum. These are good signs. We had another retracement here just 4 hours later, a small retracement here, and we're working on another retracement right now. See, small Fibonacci retracement went up, coming down, 786, and the price just bounced. It may continue down here to the $9.54 level just to hit it one more time before it continues up. So these two moving averages are my favorite. The 20 and 50 give you a good trend in the market and when things are actually going in the opposite direction, and they reduce a lot of the noise. But if you want a bigger picture on how it's going to move, you take larger moving averages like the 100 and 200. So let's remove this Fibonacci tool and put up the 100 and 200-day moving averages. You can see here it's above the 100 and it's above the 200. Right now it's coming back down to test the 200-day moving average on the 1 hour time frame. I'm almost positive that it is going to bounce off of this level and continue up. The moment that all of these moving averages line up in the upwards direction. So the price action would be above the 20, which is above the 50, which is above the 100, which is above the 200. That's when we're in a bull market. And just to draw this out, if we bounce off of this, have another retracement and come up, that will cause this moving average to go here, this moving average to go here, this moving average to go here, and lastly, the 200 will eventually cross through all of them and sit at the bottom. So we're looking at the earliest time frame for a nice confirmed bullish momentum at the end of September or the beginning of October. This is the setup that you want, guys. You want the 20, 50, 100, and 200 all moving in the upwards direction. That's your confirmation for a bull market. So needless to say, I'm super excited that Chainlink finally hit its bottom and is on its way up. If you disagree with me, please put it in the comment section down below and we'll have a discussion about it. If you're as excited as I am, leave a thumbs up in the comment section. Any comments left down below will enter you in a chance to win the Fan of the Day, which we're gonna do right now. If you guys don't know what Fan of the Day is, we pick a random comment out of the comment section and the winner is Fan of the Day as well as the winner of 10 USDT. All right, random comment generator, search. And the winner of Fan of the Day is George. Just George. George's comment was extremely educational and informative. Thank you. No, George, thank you for watching. Thank you for liking and thank you for commenting. You are officially the winner of Fan of the Day. Make sure you sign up to the CoinCasso exchange and drop your ID number in the comment thread of this comment and I will send you 10 USDT today. You will also be the pinned comment on that video, so thank you so much and congratulations. If you guys got some value out of this video, make sure you hit the like button and subscribe on your way out, and I hope you guys have an amazing weekend and we will see you back here on Monday.